Hey everyone, Couch Investor back to another pre-stock split video for today. As you remember, we did the same thing for Amazon before they stock split. Now the same thing we'll do for Shopify. Now, if you look at the graph for Shopify, you might think that the company already split its stock, right? Because the stock price is down 70 to 80% or so. So maybe an artificial stock split already happened, but the real one will happen in a week from now, 10-to-1 stock split, so it becomes even cheaper. Now, fundamentally, nothing changes. The value of the company doesn't change. The price of the stock changes. I explained the whole stock split thing in the Amazon video. If you want to watch that, it's going to be in the top right corner. But in this case, it was approved last week. Basically, the shareholders approved the share split at the meeting, the shareholder meeting. Shopify will proceed to file the articles of amendment under the Canada Business Corporation Act to effect the share split. Shareholders of record as of the close of business on June 22nd, so today, will receive from Computershare, the company's registrar and transfer agent, on June 28th, the payment date, 9 additional Class A shares or Class B shares as applicable for every 1 share held. Now, very important to note that even if you buy shares after June 22nd, you will get 9 additional shares. This is just for accounting. You will still get more shares if you buy 1 day before the stock split, just so you know. Now, another thing was voted on during that shareholder meeting, and that's, well, basically giving Toby, the CEO, a bit more power. So on June 7, shareholders of the company approved the arrangement, they called it that, and on June 9th, the company completed the arrangement. The founder share was issued to Mr. Lutke for cash consideration of 10 Canadian dollars. So immediately prior to the arrangement, Mr. Lutke beneficially owned or controlled 7,891,852 Class B restricted voting shares and 34,867 Class A subordinate voting shares, representing approximately 33.8% of the aggregate voting power attached to all of the company's outstanding voting shares. Now, this is the important part. Each Class B restricted voting share represents 10 votes and is convertible into a Class A subordinate voting share in accordance with its terms. Immediately following the completion of the arrangement, Mr. Lutke beneficially owned or controls the same amount as before, Class B restricted voting shares, and again the same amount Class A subordinate voting shares, and 1 founder share, representing approximately 40% of the aggregate voting power attached to all of the company's outstanding voting shares. So before they voted on this, obviously this made some noise out there. Why give so much power to the CEO? What if he leaves? What if he has no interest anymore in the company, etc.? Now it's done. They voted for it. The majority voted for this to happen. It's over. We can move on. Now there's something else today that's happening. Well, today, June 22nd. So depending on when you're watching this video, there is going to be an announcement by Shopify, and then maybe I asked a question and Toby actually answered me on Twitter. But before, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. That would really be appreciated. Also, do check out the other links down there. Some very helpful ones. Most of them are free. Some of them aren't necessarily free, but will give you a discount, so why not? So Shopify tweeted out, "My business is about being all up in your business. Find out what's coming next on June 22nd, 2022. And with this nice animation here, so you can see basically countries, balls, countries going into this circle thing, mixing up, and then coming out in boxes with various flags and currencies. So to be honest, at first I thought this would be maybe marketplace or maybe something with Global E, because they invested in that as well, something like that. So then Toby tweeted out, retweeted, this is going to be fire or lit. And then Mr. Couch Investor, which is me, any extra hint, Toby? To which he answered, it involves websites. To which I answered this. Well, obviously, it involves websites since it involves Shopify, right? So he didn't really want to say much, but I guess we'll see today or whenever you're watching this video, we'll see what happens there. Probably a mix of global shipping and currency, and then maybe even a marketplace. Who knows? Maybe something with the Shopify fulfillment network, which we're going to talk about right now. So this was their last quarter, so Q1 quarterly highlights. So omnichannel is critical, point of sale, GMV up nearly 80% year over year. And then online commerce, they're using here again GMV for a 2-year CAGR of 51%. So still tremendous growth year over year, because again, you have to remember 2021, you have this positive effect of COVID. Obviously, the last couple of quarters, we still had that positive effect. But as you will see, we're slowly moving away from those tough comparisons. Then online commerce and POS GMV year-over-year growth outpaced respective markets in the United States. Share of social and search channel GMV as of Q1 has gained more than any other channel since Q1 2020. Now, they're building trust with their merchants, and this is where another aspect of creating an ecosystem comes in, right? Shopify payments, Shopify Capital, Shopify Markets, more and more adoptions for that. As you can see with Shopify Payments GPV, penetration increased to 51% versus 46% the same quarter last year. And then obviously the acquisition of Deliver is expected to provide simple and scalable fulfillment. Now we're going to talk about that in just a bit. But first, again, looking at the positives and negatives here. So positive revenue, GMV and MRR, so monthly recurring revenue. But in those categories, you can see some minuses here. So obviously strong adoption of Shopify payments, capital, markets, those drove year-over-year merchant solution revenue to 29% growth, that is. But then two negatives: change in app team store partner terms, which is Shopify changed the app and team store partner terms, eliminating the revenue share and our partner's first $1 million of revenue, which is annually reset on January 1st. So that's obviously impacting the business. Macro impacts: absence of the first half of 2021, stimulus, increased mobility, high inflation, strong labor markets. Then with GMV, the minus points here, a bit of the same. The positives, online and offline GMV, each outpaced performance in respective markets in the United States. And then with MRR, we have one negative here: the stronger labor market offset new business creation. But other than that, more merchants joined Shopify. The number of retail locations using the Point of Sale Pro increased, and Shopify Plus MRR contribution increased to 30% versus 26% in the same quarter last year. Now, and this is why most e-commerce companies will see a slowdown. This is why you will see a slowdown, because, well, it got just pushed by the COVID pandemic. But if you look at that line here, the e-commerce growth is normalizing again as a percentage of retail sales. Retail sales just grows quite nicely. Then the last 2 years, we exploded, and now we're just coming back down to that line. As long as we're over that line, we should be fine. And now a quick word on the acquisition of Deliver. So it's a $2.1 billion acquisition. They obviously needed to do something about their fulfillment network, right? They needed to tackle that. This is something Amazon has been investing in for a long, long time, and Amazon has obviously enough money to throw at such a problem. Now, this enhances their capacity to manage merchants' inventory from port to Porsche and across all their sales channels, including Walmart, eBay, Etsy, and Amazon, funny enough, and social channels like Facebook, Instagram, and TikTok. And we've talked about this in the comparing Amazon and Shopify, which is Shop Promise. It's a new badge in early access that lets merchants display expected delivery dates and 1 to 2 day delivery promises across online stores, Google, Facebook, Instagram, and the Shop app. Basically their version of Amazon Prime, let's say. Because remember, Amazon came out firing when they announced, buy with Prime for stores outside of the Amazon website. This is one of the main reasons why Shopify took a major hit in the last weeks and months, because, Amazon is basically coming for their business. Now again, the e-commerce industry, the total addressable market, is still growing because there are still a lot of offline stores that aren't online, believe it or not. And so these are the 3 steps, let's say, that Shopify's fulfillment network plus Deliver equals an end-to-end logistic platform. So first step, inventory inbounding to the network. Second step, inventory distribution within network and across channels. And then you get direct-to-consumer order fulfillment. So to the customers, 2-day and next day delivery plus returns across all those platforms right here. Very, very competitive solution to what Amazon is offering. And so to conclude this video, I know the thumbnail said, should you buy before the split? Now, again, remember, Shopify is down around 70 to 80% since its all-time highs. Now, that does not mean that it is incredibly cheap right now. No, it was just stupendously expensive before. It was growing like crazy, don't get me wrong. But right now, just because there is a split, the same thing with Amazon. We've seen the run up with Amazon, right? From around $2,000 to around $2,400, $2,500 or something like that. Now, obviously, it's $109, $108. But then a couple of days later, it just went back down. So again, if you want to trade it for the short term, I'm sure you can trade it perfectly. For the long term, now buying Shopify, regardless of the split, makes a ton more sense. Valuations are down. The business is now a bit more stable, let's say. They've added Deliver. Obviously, the next coming quarter will be interesting to see what exactly happens for every other e-commerce players out there, right? Rising inflation, rising prices. So remains to be seen how they handle that. But overall, it's a tremendous business to own, great management. If you're in it for the long term, Shopify is a no-brainer. I hold it. I hold Amazon as well in my portfolio, although Amazon is a bigger position. But overall, I really can't see much negatives with Shopify, and seeing how hard the business has been hit, how hard the stock has been hit, for me, it's a no-brainer. Now again, do your own due diligence, decide whether or not you should buy before or after the split. That's your choice. But do share your opinion on Shopify, on Amazon, on trading the split maybe down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.